Good morning. This is Wednesday, November 26th, 2025, and this is um, preparation for London session opening trade on gold MGC micro contract for gold futures. We are looking at technical analysis. We have a daily chart, and the daily chart is showing us bullish trends from August low to October high, and then we start pullback. So at the moment we are in a pullback, and we we have produced first leg of the pullback. We potentially produce the second leg of the pullback, and then we are in the range for the last week, and for the last couple of days we are breaking up this tiny range up, but we are actually mitigating the supply. So first information, daily pullback. Uh, it's a bullish trend, but pullback phase C means that we are in a pullback, and pullback is likely not finished. So we have potentially, yeah, we have potentially um, two motivators for bulls and bears. So for bulls, the motivator is, but it's a longer move. It's not the session, but a rather longer move. For bulls, the motivator is this daily liquidity channel, which is, yeah, which is very close. Daily liquidity, and then liquidity, sell side liquidity for bears. Sell side liquidity is more prominent because it's very clear, very significant liquidity pool here. So yeah, the price has two motivators of the liquidity, and it doesn't really have motivators in terms of demand or supply here. So there's no motivators for the supply or demand whatsoever. Okay, because this supply here that we are now mitigating, this supply, controversial supply, but still, it is being mitigated. So the objective for bulls was reached. Now, there is no motivator in terms of supply for bulls. Okay, so this is daily, and now we are moving to 1H. So 1H we see, it's daily. On 1H we see our levels, our daily levels. Okay, so we have previous week low and previous week high that was just taken, so it's not visible here, so that the chart is clearer. So previous week high was here, I guess, was just taken. Now previous week low. Now previous day high and previous day low. So this is previous day high, sorry, previous day low and New York low at the same time. So the session low. And previous day high and New York high was just taken at Asia. It was here. So we took a liquidity with a strong push. We mitigated this supply, and now we see a strong reaction from this level. We haven't started. This is for bulls. It's only this motivator, which is actually the higher time frame liquidity. But on the lower time frame, there is no motivation really. For the lower time frame, this is the motivator. So I'm gonna remove this. I'm gonna remove it. And instead, I'm gonna put liquidity, that is local liquidity, that is 1H liquidity, and it is here. Okay, so that would be the motivator for bulls if they pursue it. That will be the final stop, the final supply. Okay. Yeah, I'm gonna leave this daily because you never know. I mean, it's still valid daily. Do we have anything here? No. We could do this, but we're not gonna. So liquidity and this extreme supply. And for bears, it is closer. So for bulls, it's very high, but for bears, this demand and this liquidity. Okay, later. This is previous day low and New York low liquidity level, very strong, um, very strong motivator for sales, a strong liquidity pool. Now we have bullish trend on 1H, so we are bullish. We we are pushing higher, creating a correction here, and then breaking up the correction with the break of structure. So we are now bullish. It's a bullish trend on 1H, and here we have huge liquidity pool, great liquidity pool, and below there is this demand that we are going to mark. So for bears, it looks better for sellers. I mean, looks better for sellers. So we have first demand, then we have liquidity pool and demand before we can go higher. Yeah, yeah. So because of this higher time frame, even though we are bullish on even though we are bullish on 1H, we expect some sort of correction here. Is this gonna happen now, or the price will continue higher before going down? We don't know. What we know is this, that we want to follow immediate order flow on 1H, and immediate order flow on 1H is bullish. So from here we will be buying. We are not interested in sales because it's bullish trend, immediate order flow is bullish. So selling would be available after breaking this and then from here. But this will be probably New York. So yeah. There is nothing here for sales yet. There's nothing here for sales yet. This is the level. Asia range low. This is the level. And when we get here, I will reassess and maybe we will be um, considering Asia range low breakout to target here. But then I will reassess. For now, we are bulls. For now, we buy only. For now, we buy only, and also if we continue lower now, it's even better because here we will leave the supply, potential supply, that will be our potential targets for bulls. Okay, so this is 1H. Okay, this is 1H. Also, if we have the Fibonacci, let's see where this demand is on Hall. This is exactly 61.8%. Yeah. Okay, so looking at our 1H. 1H is run and it's phase A2 because we broke the structure. We broke the structure here. Layout. Okay. It's run and it's phase A2, so it's continuation. We are going to look for buys. 1H order flow is bullish here. See this dotted line? And then 1H bias is bullish because we are in a bullish trend continuation. Now we will be buying only from here. We're not interested to buy from anywhere else. I mean, if we now continue, because we are actually mitigating the fair value gap on 1H. This is 1H fair value gap. So fair value gap started here and it continues. Yeah, this is fair value gap. Yeah, this is whole fair value. So this is already demand for the price. Okay, so that's whole fair value gap. So it's pretty simple for us to follow immediate order flow on 1H, and this is what we are doing. By the way, we are actually bouncing from somewhere like 50% of the range of the latest Asia Asia range. So we are mitigating the mid-Asia range and then bouncing from it from this demand here on lower time frame. But let's see what's going on lower time frame. We have 7 minutes to open Frankfurt. Frankfurt, this is 2 a.m. Eastern time, New York time. So we have 7 minutes to open. Now, on Frankfurt, we have this on lower time frame. This is M15, so we are going to enlarge it and look at M15. So this is the demand we are looking for buy, and we will be potentially targeting this supply here on 1H. Now let's see, and here is our reference for 1H. So 1H swing is bullish, phase A2, 1H RFO is bullish and bias is bullish. So we're looking for buys. Now what happens here um, on the M15, which is our lower time frame? This is not execution time frame. Execution time frame is 5 minutes. But M15 is like a zoom in of 1H, so it is reference for uh, more refined supply and demand level and local liquidity pools for lower time frame. Okay, so we have this demand here that was swept. Okay, here it was swept, which is what the price is doing before moving higher. So this is M15 taken. I'll just put it M5 taken. This is taken, and then we are bouncing from here. A, B, C correction into what? Let's see the level, the fib level here. Let's see the fib level of this push of the Asian into 50, into 50. Yeah, 50.61. So equilibrium of this range of this push here. I'm gonna look at, yeah, I'm gonna look at whole range, and this is actually this liquidity pool on 1H here. Okay, this is previously a low and New York low, with price where the sellers might be interested to go. This is Asia range low here. Okay, this is Asia range high. Okay, this is previous day high and New York high. That was taken here. This is previous day high and New York time that was taken with this big candle in the second part of Asia session. Actually, Asia session, yeah, Asia session opening here for a 3:30 for Dubai time, and then we continue. Okay, so we swept the liquidity. We are waiting for strong reaction after the sweep. Then we could consider any trading from lower time frame without waiting for mitigation of this H1. So for example now, so we swept this liquidity here, okay, and now if we see strong reaction breaking this high, so we wouldn't be waiting for breaking this high because this high is actually the proper choke, but we'll be waiting for some kind of first available level break. Then we would be looking for buys on the pullback of this. We'll be looking for buys here or maybe here. Okay. If not, if this doesn't happen, then we'll be waiting for this level mitigation and then reaction with breaking the doing the choke and then moving together. This level is also controversial because we have liquidity here. There is liquidity pool here. This is Asia range low, so the price might be also breaking it, and that would be just perfect situation. If we broke Asia low and then we would make strong reaction and then we would continue higher. Okay, so this is the basic scenario for the session. 1 minute to start Frankfurt open. What do we have here? Do we have any local demand? level. No, we don't have. It's a choppy range. This was already mitigated here, so we don't really have anything here. Yeah. If I force finding the demand level, it means that I shouldn't really mark it. The demand level should be clear, and that's it. Okay, Frankfurt opens 1 hour after Frankfurt, and I'm gonna move these lines because these lines are important in terms of the timing. So Frankfurt opens at 2 a.m. Eastern time, and London open at 3 a.m. Eastern time. And this is 6 a.m. Eastern time, which is actually the latest time I want to trade. Okay. Uh, I want to trade by really 5 o'clock a.m. Eastern time, which is here. This is 5 a.m. And this is the latest that I really want to trade. After that time, I don't want to trade at all. Okay, so this is the timing. Now, what else do we need here? We have an inside bar here. We have Asian low, Asian high, and then we're moving. We are mitigating the um, mid-Asian range. Okay, this. Let's see where we can find. Okay, so the extreme of Asian low wasn't mitigated. Yeah, it was mitigated here. Okay, so there is no demand here within this 1H range. I can see a local liquidity sweep, and that would be something interesting to consider if so. This is very tiny. Very tiny demand here, and then because of this liquidity sweep here, this is interesting. But then we have this, it pushed again, mitigated, and then no, this is mitigated. No forcing, no forcing. This is actually nice liquidity, sell side liquidity pool that might be used. Might be used for further um, fuel. So if we go down and we mitigate this demand, then we are sweeping this this liquidity, then bouncing and then mitigating this demand, and then we can look for buy pattern. Is it reasonable to buy from here if we break this inside bar? No, because that's not our strategy. We might be interested also to buy from Asian range high breakout, so find the continuation pattern. And be looking for both continuation patterns, which is breaking the Asian high, and then reversal pattern, which is breaking the Asian low and then reversing and continuing. Okay, we're not going to look at M5 until we see a place where we can trade, where we want to trade. And the place where we want to trade is either this demand or after coming back to a strong bullish momentum. And then I said that it would be this choke. We classified this as a choke level because normally, as I said before, our choke level should be here. Okay, it should be here. So now we have a choice which one we are going to trade from. And because it's a bullish, everything is bullish, I would put my choke level here. This is M50. It is actually M5 choke, probably. Let me see how this will be working on M5. So let me see M5. Yeah, exactly. This is M5 choke level, as you can see here. This is M5 choke level. There is also liquidity pool here. I didn't mark. So let me mark it. So the liquidity pool level is here. This is over Asian range high. Yeah, but this is obvious. Asian range high is liquidity itself, so I'm not gonna mark it. It's obvious that the liquidity pool is here. Okay, so we're waiting for this M5 slash M15 choke. If it breaks, then we'll be looking for buys. Come on, what is it? If it breaks, I'm going to be looking for buys targeting Asia range high or even higher. Otherwise, we'll be waiting for this mitigation of the 1H demand and M15 inducement. So we'll be waiting for something like that. Okay. So there are two buy scenarios. I'm gonna record this in my journal. Copy image, copy link, copy image. Okay, there's nothing else for us than just waiting. So I'm gonna stop the video stream and then come back when we got either to this level or we break the structure higher. Okay, so we have this London opening now. This is 10 past 3 a.m. New York time, and we have what do we have? We have this level that we predefined. Wait a second. What is this? So we have this level here as a break of structure level. So yeah, from here. So it broke a structure. Okay. It broke a structure just before London opening, and then once it broke a structure, then I went to M5 and I was observing if there is any occasion. So by breaking this structure here, we produce the order block, we produce a demand level that that was immediately mitigated. And what happened at M5, we are going to see here. So this is M15 on the left, and this is M5 here. So what we have here is this, that the price mitigated so the price actually went down here, mitigated uh, this um, 61.8% retracement of the whole uh, Asian range high and low, and followed by this, we could see at the Frankfurt Open, so 1 hour ago, more than 1 hour ago, we could see a reaction from this level. We broke the demand level, or we swept the liquidity here, and then we see a sluggish reaction in the fight. In the meantime, in the bearish leg, the price produced fair value gap. That was bearish fair value gap. And then in the reversal, when the price was trying to reverse, it was mitigating this fair value gap, but didn't produce any new lows. And finally, we broke this fair value gap at just before London Open. And by breaking this fair value gap, this fair value gap became M5 inversion fair value gap, which is actually simply validating the bearish fair value gap, and making bullish fair value gap. Um, so price created inversion fair value gap, but on the way, by creating inversion fair value gap, it created a fair value gap on M5 here. So not only we had, it was here exactly, okay? Not only we had fair value gap, inversion fair value gap, but also created a bullish fair value gap. So now we had two levels to actually look for buys from. So by this candle, we mitigated fair value gap, and we made another low, another candle that mitigated fair value gap and inversion fair value gap, and then broke this high. So at the end of this, at the close of this candle, I opened the buy stop position by breaking this candle that mitigated bullish fair value gap and inversion fair value gap. And I open the position with stop loss below this M5 fair value gap that was moved to break even now. And yes, and here we are. I'm gonna mark it as this. Okay, so that was the initial open. of the position, and the stop loss is um, why doesn't it show visibility? Why doesn't it show as M15? Okay, and it is more than 4R. This is Asia, so I anticipate that Asian range high will be broken. Will it be broken now straight away, or it will be mitigation again here? We don't know, but I already moved my stop loss to break even. So if we are mitigating, then I will be looking for additional buys. Uh, okay, this fair value gap here, hmm, that was the first signal that this move may be a proper move. Then we have another fair value gap just produced. Just produced here. Okay, this is fair value gap. And 5 fair value. So the price might be mitigating it. Our stop loss is just at the bottom of this fair value gap. So yeah, if we break this fair value gap, it will be inversion fair value gap, and it will be also, you know, another signal to sell. But we don't want to sell. We are not allowed to sell until breaking this level here at 4,162. So what is going on here at London? London opening very strong reaction. Um, we have fair value go. Why here? Why take profit here? So it's because this 1H is already mitigated here, and now we don't really have anything on the left. So we have actually liquidity sweep here. We have liquidity pool that is here. I'm gonna mark it. I'm gonna mark it as M15 available liquidity that is here. And this is what we may be aiming really to mitigate. That's a very, very long list. This is when? This is 14 November. It's more than 10 days ago. So this is not something. Come on. Okay, this is not nothing really perfect because this is the minor liquidity, M15 liquidity, 2 weeks old, so it is expired date on this. So basically, we don't really have to do it. We could put our stop loss. We could put our TP even higher. We could put our TP here at this level. But yeah, but I think it's fair. I think it's fair level here to put the stop loss, to put the take profit. It's a mid, so let's say it's a mid of this supply level order block that was 1H order block. So I think it's all right. Let's see how the TP look like on 1H. So you see, this is where the TP is here. Um, yeah, there's a range high here. Now, could we put TP here? That would be just beautiful if we because this is for 1H, this is the mitigation, okay, of this level. But will it be mitigated today? Yeah, we'll be very happy if we mitigate this level. This is this expiry date. Um, this is the expiry date. Liquidity, buy sell liquidity. Yeah, that's always we have pretty nice signal here, and this is also order block. And 15, yeah. So basically, we are on the edge of the order block. Yeah, if the price goes down, let it be. Let it be because this is something more experimental that I'm testing, that kind of entrances, and this is something I haven't tested yet. So basically, I shouldn't be using, but I decided to do so now. Okay. So London is pushing higher. This mitigation here looks like it was a proper thing. What is controversial? What is something that may be happening? There is a liquidity pool here, Asia range high, and what may happen is this: that we break that liquidity, we sweep that liquidity, and then we would like to sweep this liquidity as well, maybe mitigating this 1H. But this is, and then from there we could so quick targets at London session would be just perfect, and the quick target is Asia range high. But Asia range high target is $200, which is good. This is also a quick target, $360. This is also a good target. It's a quick target. So as long as Asia session will be broken, then we will the market will have for bulls for bulls will it have the motivation to mitigate further? Will market have motivation to reverse and find for some bullish steam here? Maybe not. I mean, it's a big push, it's a big momentum. I'm gonna leave it as it is. And once we are mitigating, I'm not gonna touch the stop loss. I'm gonna leave stop loss in a place, hoping, presuming that for London scenario, this is the target for bulls. If we break the stop loss and break even, I'm gonna look for buys from somewhere here. I'm gonna take a picture. Wait, before I take a picture, I'm gonna also work here on visual orders sent to back. So all the candles, they're visible. They're not covered by candles are always in the front. So candles are always in the front. Now I can take a picture. Now, yeah, That's all. We just need to wait and see what happens. There's nothing else. There's nothing else now. There's nothing else. Just waiting. Let's see how London behaves. Is it going to react in this M5 fair value gap or not? There's also M15 fair value gap coming. There is no there is a small fair value gap here, but the proper fair value gap will be made after this M15 close, which is 5 minutes. If we manage for 5 minutes, that will be a fair value gap on M5. Yeah, so let's look at M15 only. There is no point to look at M5, really. So this is M15. We broke this supply. So there is no 1H supply anymore here. There is nothing here. Um, as we can see, that was our prediction pre-market that if we break this, if we make M5 choke, okay, here, then we'll be looking for. Wait, well, why is it like this? It's supposed to be like that. Okay, I don't know why was that so big. Okay, that was our prediction. Yeah. So we break this M5 choke, then we're looking for buys. We're not waiting for this demand anymore. Of course, if the price goes to this demand, we'll be considering this scenario. But now we are but now we are actually trading the continuation of the order flow. So we are continuing 1H order flow, which is this. Okay, make it, yeah. Okay, so this is the order flow. Um, we are approaching Asian range high. What is also prominent here is this, that here's previous day high and New York high. Okay, here. So Asia broke this level, and if that was liquidity sweep and price would have an intention to reverse, then we would see a reversion. Okay, and definitely invalidation of this level would just would just invalidate the idea of the buy side liquidity sweep here in this area. So that might have been manipulation just to attract more sellers so that they could be used, exploited by buyers, by bulls to produce another push. What is also visible here in this chart at the beginning of the 1H trend is this that we have strong impulses. Okay, here we have strong bearish impulse as well, but then this bearish impulse is just broken by bullish impulse. Then we have correction and then again strong impulse. Now we have correction. This is pretty strong impulse here, you can see. But then again, momentum is being visible. Bullish momentum is being visible in these cases. We don't have any motivation to trade sell. And we have M15 finished. So this is exactly half an hour of London session with the first 15 minutes with a huge momentum, then second 15 minutes, which is actually uh, posing in the momentum. We will accept any outcome from the market. We just want to follow the market. So what we have here is M15 fair value gap, M15 fair value gap, volume imbalance, which is here. Yeah. This is M15 fair value gap, and this is some kind of protection for my position because the price, this might be a strong support for the price to continue higher. I'm gonna remove this now because this is fulfilled. And this is a strong support. This is M15 fair value gap. Now, if this fair value gap, if this M15 fair value gap, if this fair value gap breaks, then we'll have inverted fair value gap. And then potentially we could be selling. But we are not going to sell because there is a not huge, but nice liquidity pool here. Okay, so the price is reversing. The price is actually reacting from this supply. That may still work at the top. We'll see how this will work within fair value gap. Is it going to break it or react from it? Now we see the reaction. Yes. Okay. Now, sorry, London is pushing down. It's breaking this fair value, but it must close below. It must close below. Sorry, it must close with the body, not just with the wick. So we need to wait for a whole 15 minutes if it's gonna break. Here is the M15. Yeah, it's M15 order block demand. It's M15 demand. Now I'm gonna look at M5 as well. It's a very strong reaction. So London might be manipulating. Wow, look at this. Almost out. This is the mitigation of M5 fair value gap. And is it going to break or not? I cannot believe it. Look at this. Cannot believe it. I cannot believe it. This is ridiculous. We were saved with our stop loss by a tick. If it's just a reaction or permanent move, we will see. But if this is a permanent move and we're going back to a momentum, to a push, that's going to be like ridiculous. It's gonna be ridiculous. It's crazy. Okay, if we break this, then here we have another fair value gap. This is already done, so nothing here for us. Um, this is already done. Is there anything else that we have here? M15 fair value gap. What I'm gonna do, I'm gonna make this, because this is choke here, but the proper, I would say the proper demand or the block might be really here, because this big wick is a kind of mitigation. Okay, so this is M15 demand, and this is exactly in the, cannot believe it, look at this candle, I cannot believe it. And if this continues, then it means that in trading you need to be lucky. I mean, if I got stopped out and this continues. So what was that all about, this black candle here, the bearish candle? Was it about manipulation? Was it about quick move down and grabbing all the liquidity here, which is in volume imbalance? I don't know. But this is crazy. And this candle finishes in 1 minute, exactly 1 minute left to finish this candle. If this candle breaks, if this candle breaks higher, there are big chances that we may see continuation. The last minute of 5 minute candle is the most important. So we see a fight here. We see a fight. This M5 fair value gap is holding, which is just below. Which is just below the M15 fair value gap. Which is M15 fair value gap. Okay, so this M5 didn't finish positive. It was a strong reaction, but now what are they going to do? Are they going to grab liquidity from here? And this is 4,200 level, by the way. 400, 4,200 level, yes. 4,200 level. So the reaction also, I didn't mention about it, but the reaction might be from this level because it's a roundish level. There are always psychological roundish levels that the price is reacting. And we're out. Okay. Okay, I'm making notes, so please give me a moment. Okay, so M15 might be violated and it might be inversed M15 then for sells. Okay, but we're not allowed to sell, so we will be waiting for mitigation of this demand here. Let me see how this demand look like M5. Okay, this fair value gap is mitigated. This inversion is not mitigated in the middle. So the theory is saying that the inversion fair value gap is still valid if it's not mitigated in the middle. So yeah, we will see. If we see reaction from here, then we'll be also buying. But from the middle, there is already order block here, so this is like a pretty strong signal. Let me see. Okay, so it is going to be 61.8 here. Maybe I can just use it as M5. Yeah, only on M5. Like that. Okay, we are mitigating it in the middle and then just retracing straight away. 61.8. We have this demand mitigated. We have inversion fair value gap in the middle, and then we see very strong reaction from here. Now, how much is this? This is $82 for one contract. I think it's worth to buy it. Yeah. Because on the other hand, this fair value gap here is an inversion now. This is inversion fair value gap, so for sales. So maybe it's better to wait for Asian high to be swept or to be broken out. Mm, And this is inversion here. That was bullish fair value gap. Now it become M5 inversion fair value gap. That was fair value gap, and no, it didn't because it's just with the week, so it's still valid. This is still valid. This is still valid for bulls, and it's a very nice reaction from 61.8. Um, Also, there is a liquidity grab here as an induction. Yeah, I'm gonna leave this order here, even though there is a inversion for value gap. I'm gonna leave this order, and I'm gonna even buy from here if this candle finish printing below. If it breaks, then I will be buying from this level. I'm gonna mark this as M5 liquidity taken here. And so there are a couple of confluences. M5 liquidity taken. Um, Mitigation of the inversion fair value gap. 61.8 in the point. Mitigation of this level. And then mitigation of the M15 order block. M15 order block. Yeah, so we have strong support here. Plus we have a really good target for bulls, which is Asia high, Asia range high, and the um, liquidity that was built. 1 minute left. Are we going to buy here? Do we want to buy here? If we buy here, that's gonna be 36.40, so we can buy 3 contracts here. If it breaks, ideally, if we break this low here to test 61.8 again, please do it. If we also mitigate this fair value gap, uh, there is liquidity here. M5 available. M5 liquidity, I would say it is also M15, so I'm gonna put M15 available, which is stronger, right? So it's here. It's visible here. M15 liquidity. Yes, we have the mitigation, and then we can when we can trade how many contracts? This is 40. So yeah, 3 contracts. We can buy 3 contracts to buy 3, and this will remove. Okay. Then we will be putting our stop loss to break even at the mitigation of this inversion uh, fair value gap. Stop loss to break even. Yeah, just below 50%. Okay. Let's see how this play out. We're going to risk $120 with this 3 contracts, and then stop loss will be, and then TP will be here, Asia range high. let's say stop loss to break even, and that's going to be 33. So yeah, one third. I think one third would be okay. More or less one third mitigation. Okay, we have $100 risk. Yeah, the profit is here. So this is 3.5, yeah, 3.54. Okay, let's take a picture. Oh, copy image. Um, now this is what time? This is 3:52. So almost first hour finished of London session, of London opening. Almost 1 hour. Okay, so this is 12:52 of Dubai time, and we have second trade open. That's LC1. Okay, we touched the fair value gap, inverted fair value gap, and then we have a strong reaction. Now, my stop loss to break even. Yeah, maybe it's okay to put stop loss to break even now. Yeah, we have. I will be more. I will be more confident to buy after breaking this and producing new fair value gap. Um, Still, I'm experimenting with fair value gap, so this is okay. Stop loss to break even after mitigating bearish inversion fair value gap. Okay, trade closed. Now, are we going to enter this one here to further mitigation? No, we will wait for. No, we'll wait for the proper. Maybe we'll wait for M15 close and enter M15. No, we don't really enter on the M15. Um, yeah, this is M15 inversion for value gap here, which is a resistance. So do you want to trade with the resistance? I would say that if we go higher, if we break this fair value gap inverted, then we'll be bullish. Then the order flow will be bullish. Now the order flow is not clearly bullish because we broke this fair value gap. The bullish fair value gap was invalidated and it created inverted fair value gap both M15 and M5. Okay, after breaking it, then we may be considering trading from fresh fair value gap or just breaking Asian range high breakout, just trading this setup that we normally trade. Otherwise, we are waiting. Otherwise, we are waiting for maybe further mitigation and something here. There is also fair value gap. No, there isn't. Yeah, there is. There is a here M5 fair value gap. There is M5 fair value. I need to train my eyes for the fair value gaps because there are so many fair value gaps each year. It's just mitigated this fair value gap and then we see the reaction. If this fair value gap is broken, then it will be invalidation. Then it will be inverted fair value gap and we could trade from it. So this inverted fair value gap will be kind of mitigated and kind of not valid. And then only this one will be valid. For now, we have this M5 fair value gap that is bearish. Okay, so this is bearish fair value gap that is being now invalidated. Yeah, 1 minute to close. Until this is broken, I'm gonna keep it. I think we can classify this as an inverted fair value gap now. There are 12 seconds left. Yeah. Now 15 is still retracing from this. Are we mitigating? We need to mitigate this and then push higher. How much is this? We have mitigated it. This is $50. So we'll have to. I'm not sure. No, I'll wait. Now I'm a little bit confused. Too many. Too many fair value gaps. This is inverted fair value gaps was mitigated here. Okay, and now we're pushing. We just need to destroy this one here. As long as we destroy this, we'll just remove it and then we'll have a clear picture. The problem is that when we destroy this one, the price might not be retracing and we will just leave without trade. But it's okay. It's just an experimental phase. And it's actually, I would say that the price would have to destroy M15. I'm looking at M15. Let's have M15 destroyed, and ultimately this is also This looked like an order block. This looked like M15 supply. Yeah. So we are in between these two things. Yeah. Okay. Let's have a break, coffee break, toilet break, and then I'll come back when something happens. Okay, so this is 5 o'clock. So it's 3 minutes to 5 o'clock a.m. New York time. And after the first reaction, after the pre-Asia, sorry, pre-London, so Asia finishes here. Yeah, Asia finishes here, then pre-London manipulation continues, and then Frankfurt starts with a big push. Then London continues with the push, and then London reverts and look for something. We don't know what exactly, but this price action here doesn't allow us, doesn't encourage us to trade. What we see here is fair value gap, but we didn't break this high. Still, it's a fair value gap. This fair value gap is broken by this M15 candle, and it creates inverted fair value gap. Above inverted fair value gap is unmitigated M15 supply. So this M15 inverted fair value gap that used to be bullish, now it's bearish, it's red, is a resistance. On top of that, there is a resistance of the order block, which is supply. Now we see initial reaction connected probably to the hour close, 1H close, just in 1 minute, and we will have 5 o'clock New York time starting here. This is 2 o'clock p.m. Dubai, and then 6 o'clock a.m. is here. New York time, 6 o'clock a.m. This is the latest we can trade. We can do anything. So what we have here is a lot of liquidity on the sell side, and we have this still unmitigated demand here. We can make it larger. Um, and then we have, oh, nice. And then we have supply. So what we can do, we can trade Asian range high breakout if we got there. Of course, we favor buys, and we consider buys only because um, 1H swing is bullish, it's a run. 1H order flow is bullish, and bias is bullish. So we consider only buys. Um, Especially consider buys after this fair value gap, inverted fair value gap is broken, then we remove it. It's broken when M15 closes above. Okay, not just break it, but closes above. And actually, it's not valid anymore because, yeah, I will remove it because it was mitigated already twice here. So the third time, regardless, it's not going to be relevant. So I'm going to just remove it and leave it only the supply that is being mitigated now. The supply is being mitigated, and now we have a strong reaction from there. Okay. Now we have liquidity sweep here. Let me leave this liquidity here and liquidity sweep of these two high. Okay, we have liquidity sweep. and then M15 liquidity sweep. So we will see how this will unfold. If this is just a local sweep and we will move higher, or we will revert. And M5, M15 is showing a huge reaction now from that supply. The local supply is broken, and so we remove it. We remove also fair value gap, bearish fair value. However, this fair value gap has become inverted fair value gap. So small that I don't know if I should really consider it. But it created inverted fair value gap at M5. And if this candle closes with bullish, it will be bullish M5 fair value gap plus inverted M5 value gap. So there will be two levels that supports buy. Then I could be buying on the breakout of this candle with the TP above Asian high. So liquidity sweep on the left. Okay, this is this liquidity sweep, potential liquidity sweep. We have 1 minute 35 seconds left, and we have M5 fair value gap being printed. So it will look like that. This is M5 fair value gap, and this will be inverted M5 value gap. Yeah, because it used to be bearish, now it's bullish. Okay, so we have two levels that we might be interested to buy from. So now we are going to wait for the mitigation, and we are going to buy on the breakout of the mitigation candle. Shall we go to M1? Maybe this is a good strategy to go to M1 and simply buy from M1. But on M1 there is no visibility. M1 visibility M1. Okay, so now we have the end of M5 candle, and now we would have to mitigate one of these levels here. M5 fair value gap and M5. So this is M5 fair value gap, and this is M5 inverted fair value gap. Fair value gap is here, and it's already mitigated the top of M1 fair value gap. Okay, as you can see here, M1 is here, so it's already mitigated. But M5, where is M5? I need to come back to M5. Where is this M5? Yeah, this is M5. Okay. And now we go to M1. We have two entries. We have an entry to wait for this mitigation, or we have an entry of breakout. Let's see how long it will be. If we it's $50, still okay for the breakout. So we'll be entering here and then with a stop loss below. Just now, what may happen If it's not a buy sell liquidity sweep, it is a push to grab this liquidity. So yeah, I'm gonna put stop buy one here and stop buy one here. So these two orders, if they are tucked in, stop loss will be just below this level here. Let me see Fibo on one. Okay. Stop loss will be okay, so it's going to be about $100 stop loss. It will be below 61.8. What is not nice is this. But this will be swept. But the question is when. Is it before London or after London? This is left for the New York. When will it be? When will it be swept? That is the question. This liquidity was swept, and after sweeping this liquidity, we see strong reaction. But it is reacted. It has reacted um, in this supply, and we have another bearish reaction from there. Then we can say that we mitigate the demand. We can say that we have mitigated the demand, and now we are pushing higher. This push here is a strong push just before just during the 1 hour close, just to sweep the buy side liquidity, produce a reaction, and now we see maybe we'll be tucked in because something is going on at the end of N5 candle. Our stop loss will be somewhere here. Yeah. There is buy side liquidity on M1. There is a sell side liquidity on M1. Anything can happen. I don't need to know what is going to happen to make money. I want to, why don't I want to wait for mitigation of this? Because if we break out, we may just go very strongly and we could just aim mitigating this demand, this buy side liquidity before we move lower. So now we are tagged in with a first contract. The stop loss will be somewhere here. This is 50. And then the next one is going to be one. Yeah. I'll put it like this because this is something that stings. I'm gonna try to enter the second position after mitigation of this, or if we don't mitigate it, then I'm gonna put stop loss to break even after Asian range high is mitigated, stop loss to break even here. Yeah, Okay. And then, yeah, so $47, okay, below this levels. Okay, let's say it's looking okay. The price action M15 is horrible, right? It's up and down, up and down. Look at them. M1 is the same. Okay, that's it. That's it. Let me just record this trade as the last trade for today. After this trade, I will probably finish because we are here, and with this price action, if we retrace, I don't think I want to trade. So I'll be looking for buys, and mm, so that will be 1.3 and stop loss to break even, and then okay. If we move higher, I'm gonna leave my stop loss to break even. I'm gonna leave it for US session as continuation, and I'll just leave it, hoping that we are going to go where? Oh, this is daily. Yeah, no, we might be just mitigating this daily. We might be breaking this daily supply. Okay. Yeah. Okay, so once we get to this level, probably daily, when we got to this level, to the edge of the triangle, so this is where? So this is somewhere here. Yeah, I think so. This is 1 hour. Yeah, stop loss to break even. And then I will just leave it as it. Now we're tracing, but there is liquidity left on the buy side. There is liquidity on the sell side here. We might be grabbing this liquidity before moving higher. Okay, M15. Now we have a little bit of volume coming in because you see the candle, the nervousness of the candle. Am I interested to play the breakout of this high? This highs might be broken up and go higher, or this might be used as a liquidity to fuel the down move. And we don't know this. It's gonna be €100, $100. No, I would rather trade from here. If we mitigate this and then we see a reaction, then I might be willing to trade. Um, yeah, I'm changing to M5. I'm changing into M5, and M5 looks like I enter on the breakout of this candle, inside bar candle, was M1. Okay, I will go back to M1 and record that trade. Even more sell side liquidity here now. Now we broke this very local, we grabbed this local liquidity here. This is M5 candle, looks scary. But this candle looked also very scary, this one here, M15, look at it. Looks scary and then we're just retracing. Okay, so now, mitigation of this fair value gap plus inverted fair value gap on M5. Okay, one contract here to add, and then stop loss will be 27 plus, yeah, it's gonna be good. Now we are doing what? Are we going to break it? 61.8 here. Well, this is 526, 527, 528. No, yeah, am I right? Yeah, no, this is 518, 517, 518, 519 a.m. in New York time. Let's see if we see reaction from here. Yeah, and we have a break of this liquidity, M5 swap, M5 taken. Then we're in for the two contracts. M5, how does it look like? M5 looks like this. All right. But we're on M1, so let's stay on M1 and let's see what is going to happen. We are going to move our stop loss to break even here. Okay. All right. We are observing strong reaction or fight either to respect this 5 minutes fair value gap and 5 minutes inverter fair value gap or not. And let's see what market decides. We observe first mitigation on M1, reaction. Second mitigation, reaction. Now the third mitigation, and what? Here is 61.8. Are we going to mitigate it? Come on. Where was I entering the market? What the heck? I think here. I'm not sure. What I wanted is this. Oh, it's this. Okay, 61.8 mitigated. And fair value gap is broken, but only with the week. It must be M5 close below this level. We have 2 minutes to M5 close. 2 minutes to M5 close. Yeah, if we break this candle, then that's it. So I move my stop loss because then what would be the point to keep it lower? It's already mitigated 61.8. If they want to go lower, they would go lower. They would stop me out anyway. So the reaction is pretty bearish now. M5, how does it look like? M5, so M5 closed. Okay, so this is the beginning of M5 now. M5 didn't close below this. It means that it may still be valid. Shall we be buying one more contract here? Because now when the reaction is bullish, then we'll probably be just... Okay, I bought here at the breakout of this candle. So, yeah, I bought it here. Somewhere here. Yeah, I really struggle, but I think that's gonna be okay. Some experimental trading, so I'm not gonna force ideas. Okay. We are bullish. We want to be bullish. We want to buy, no matter what. And, okay, so we bought here. Okay, trades. Okay, is that the beginning of breaking this, of sweeping this buy side liquidity? Is that the initiation candle? If this candle breaks, if this low breaks after this reaction, so what we see here is this from here, right? From here. Okay, so we mitigate this demand. We have strong reaction. Then we have strong bearish reaction. Then we have a strong bullish reaction. Then we have pretty strong bearish reaction. Then we have super strong bullish reaction and liquidity sweep on the left. Then we have correction. And in this correction, I am buying. The correction is, yeah, quite scary at the beginning and later by breaking fair value gaps. But then we are providing a strong reaction by reacting on that fair value gap, breaking it. Now, it's crazy volume. It's 3:28 New York time. 3:28 New York time. Do we have any fair value gap on M5 or not? Not really. Come on, what's this? M5 looks so bad here with this price action. We have. Yeah, let's just leave it. I'm gonna be finishing. I'm gonna be finishing and yeah, that's it. I took 3 trades, 3 experimental trades, testing forward, testing fair value gap concept. First 2 trades break even. Third trade open for US, for New York. If if we have it open, because look what's going on. And this bearish move here is scaring us. Okay, yeah, that's closed. But it closed on this. If I had left my stop loss here, I would be in a trade. So why did I want to save $2 or 3? Because I was assuming that once this is broken, then the price will continue south. And this is what happened. Okay, let me take a picture, copy image. So first of all, third trade, minus $75. Okay, and the price is actually, ooh, wow. Okay, M1 is not needed anymore. We go to M5. M5 is producing very strong bearish reaction as if it was the beginning of this sell side liquidity sweep. We are going to remove fair value gap. Okay, because we're still writing, okay. This liquidity sweep also not important. Now, this fair value gap has become inverted fair value gap. Wow. So the price might want to mitigate it before going lower. Let me change it. So M5 fair value gap has become M5 inverted fair value gap. We just changed the color. Okay. This trade we can remove now. So this liquidity sweep here, it was true liquidity sweep. On the other hand, we also swept this liquidity here, and we have only, okay. Now we have a strong reaction from that liquidity. This M5 inverted fair value gap, it was mitigated already, so we shouldn't really consider it anymore. Hmm. That is horrible price action now. Okay. All right, my markups and trade summary here. First to trade, third trade -25. Okay, cool. Um, yeah. Hmm. I think I was, yeah, I think it was a good day. I'm not gonna consider this day for weekly review, I think, because it's very strange in the morning. Okay, that's it. Tomorrow is a new day. I'm coming to show up at the market. And this price action here, horrible. From London opening, big push up, then down, then ranging. Yeah, very difficult to trade here. So, yeah, let's see what happens. And then tomorrow we are back. Cheers.